Welcome to Imarticus Learning, your go-to channel for all things finance and investing. Today we are diving into a market where currencies like the dollar, yen and euro battle it out. Yes, we are talking about the Forex market. And don't worry, we're not going to turn you into a money wizard in Hogwarts. You will learn everything you need to get started in Forex trading. So buckle up because this is going to be one fun ride through the world of currencies. Alright, let's kick things off with the basics. The Forex market, also known as FX or foreign exchange, is the largest financial market in the world. It's where people, businesses, and even governments trade currencies. And get this, over $6 trillion is traded in Forex every single day. Think of the Forex market like a massive currency party. Everyone from tourists to multinational corporations is invited. They are constantly exchanging one currency for another, whether it's to go on a vacation or to buy a business overseas. And just like any good party, you need to know what you're doing if you want to stay and make money. So how does Forex trading work? Unlike the stock market, you're not buying a slice of a company. Here, you're buying one currency and selling another at the same time. That's why it's always done in pairs. Imagine you're planning a trip from India to the US. You would need to swap your rupees for dollars, right? In Forex, you would trade something like INR or USD, buying US dollars and selling Indian rupees. If the value of the dollar goes up compared to the rupee, congrats, you have just made a profit. But unlike at the airport, where the exchange rate is fixed for the day, in the Forex market, rates change every second. So timing is everything. Now let's talk about the big players in the Forex market. Picture this as an epic game of Monopoly, but with real money. Number 1. Central banks. They are like the referees of the game. They control the money supply and can even step in to change interest rates. Number 2. Commercial banks. These guys handle most of the trading volume. Think of them as the big sharks in the ocean. And number 3. Retail traders. That's you. And then there's us, the smaller players swimming alongside the big fish, trying to catch some profit waves. But don't worry, even small fish can get a good meal in this ocean. Currency pairs are where the action happens. There are 3 types of pairs. Number 1. Majors. These are the big leagues, including USD, Euro, JPY and GBP. They are traded the most and have the lowest risk. Number 2. Minors. Think of these as supporting characters. Currencies like the NZD, which is the New Zealand dollar, or CAD, which is the Canadian dollar. Number 3. Exotics. Now these are the wild cards. They include emerging market currencies like the South African or Turkish. Fun but risky. It's like choosing between fast food, majors, a fancy restaurant, minors, and an exotic food truck you have never tried before. Exotics. Just pick wisely. The beauty of Forex is that you can make money whether currencies are going up or down. How? Let's break it down. Number 1. Going long. This means you believe a currency will go up in value, so you buy it now, hoping to sell it later at a higher price. Number 2. Going short. Here's where it gets interesting. You can actually bet that a currency will lose value, you sell it now and hope to buy it back cheaper later. It's like betting on which way the tide will go at the beach. Whether the water is coming in or going out, you can still ride the wave. Now let's talk about the elephant in the room, risk. Forex can be highly profitable, but it can also be risky. The market is volatile, which means prices can move fast. It's like driving a sports car. Fun, but you need to know how to handle those sharp turns. But don't worry. With the right tools like stop-loss orders, which automatically sell your position if it moves against you, and a solid strategy, you can manage the risk and still make good money. So, how do you actually get started? Here's your simple checklist. Number 1. Choose a Forex broker. This is your gateway to the market. Look for a regulated broker with low fees. Number 2. Open a trading account. Sign up and deposit some cash. Many brokers allow you to start small with just $100 or even less. Number 3. Get a trading platform. Platforms like MetaTrader 4 or 5 are popular for tracking currency movements and placing trades. Number 4. Practice with a demo account. Before you dive into real trading, use a demo account to get the hang of it without risking real money. Remember, Forex trading is a journey. Start small, learn as you go, and don't let the ups and downs scare you off. If you enjoyed this video, hit that like button and subscribe to Imarticus Learning for more finance and investing tips. Got any Forex trading tips of your own? Drop them in the comments. We would love to hear from you.